Philadelphia, Pennsylvania, a city known for its quiet strength in finance and history. In 2024, a company appeared here without fanfare. Its name was Armada Acquisition Corporation II. To most, it looked like just another SPAC, a special purpose acquisition company, one of those blank check entities that raise capital with the promise of acquiring or merging with a private company. But unlike the hundreds of SPACs that had come and gone before it, this one carried a strange stillness. It moved by the book, yet nothing about it felt ordinary. Beneath the surface, something intricate, something almost engineered was at play. A structure that bridged traditional Wall Street capital with the volatile realm of blockchain-based assets. A bridge that perhaps shouldn't have been built at all. For context, SPACs typically follow a clear life cycle. First, an IPO to raise funds. Then, the money is locked in a trust account while the sponsor searches for a target company. Next, a merger announcement. And finally, the shareholder vote that seals the deal. During this process, the market tends to speculate violently. Prices rise and fall based on rumor, expectation, and emotion. But Armada Acquisition Corporation II was eerily quiet. There was no speculation, no hype, no volatility, only a steady pulse. On May 22, 2025, the company completed its IPO, raising approximately $230 million. Each unit was priced at $10 and roughly 30 million shares were issued. It was, by all accounts, a standard listing, yet the stock price barely moved. No post-listing spike, no speculative rally. It hovered almost stubbornly around $10, as though the number itself were sacred. For a SPAC, that was highly unusual. Normally, excitement or uncertainty sends prices swinging between $9 and $12. Here, there was nothing, a motionless line in a market addicted to movement, and that calm became the first mystery. Then came June 24, 2025, the date of unit separation. As usual, the initial bundled security split into common shares and warrants. This too was procedural. But 4 months later, something happened that would ripple far beyond the SPAC world. In October 2025, Armada announced a planned merger with Evernorth Holdings, a merger valued at $1 billion. At its center, an institutional XRP Treasury. The concept sounded simple but was revolutionary, a digital asset vault for institutional investors. If realized, it would enable major funds and corporations to hold and manage XRP, the digital token associated with Ripple, in a compliant and professionally managed framework. No SPAC had ever tried this. This was not a company merger, it was a structural experiment. It sought to merge Wall Street capital with blockchain liquidity, and that made the entire financial community pause. The cast of backers was equally extraordinary. SBI Holdings, Ripple, RippleWorks, Kraken, Pantera Capital, GSR, and Chris Larsen, co-founder of Ripple. To see all these names on one deal sheet was shocking. SPACs usually target small biotech firms or emerging tech startups, businesses with tangible products or measurable earnings. But this was a bet on a digital asset itself, on XRP's future as an institutional reserve currency. And that became the second mystery. Why would a US-listed SPAC under strict SEC oversight center its merger around a cryptocurrency still entangled in legal and regulatory scrutiny? Was it bold innovation or reckless timing? Then, on October 29, 2025, Armada issued another press release. Its ticker would change from A to XRPN the next day. The warrant ticker would be XRPNW. The sponsor? Arrington XRP Capital Fund, a name synonymous with digital asset venture investments. This move was unorthodox. Ticker changes usually occur after a merger closes, serving as the symbolic moment when the new company officially takes shape. But Armada did it before completion. That was the third mystery. Why rebrand ahead of confirmation? It suggested either an overconfidence in closing or a deliberate attempt to signal certainty to the market. Yet the market didn't bite. Despite the headline, the price stayed perfectly flat. And that leads to another question. The fourth mystery. Who or what was keeping the stock so stable? Normally, SPAC prices react violently to any major announcement. But XRPN's chart was a flat line. Analysts speculated that redemption patterns might be involved. In SPACs, investors who dislike the announced merger can redeem their shares for cash. If redemptions are high, the trust account, the company's only real pool of capital, shrinks dramatically. In other words, less money for operations, less confidence, and lower long-term sustainability. But Armada never disclosed its redemption rate or remaining trust balance. Without those numbers, no one could determine whether this supposed billion-dollar treasury was real or symbolic. Could it be that the majority of the cash was already gone, redeemed by early investors? If so, what exactly would fund the institutional XRP vault? Silence filled the gaps. Even deeper was the fifth mystery, the revenue model. The company claimed its XRP Treasury would generate steady institutional income. But how? Would it charge management fees, earn from spreads or yield on held assets? Or was it betting directly on XRP price appreciation? If the latter, it wasn't a treasury. It was a speculative crypto fund in SPAC clothing. And that blurred the line between innovation and deception. Then came the final layer, governance opacity. No one outside the inner circle knew how sponsor compensation was structured, how PIPE investors, private investment in public equity, were positioned, or what pre-closing conditions governed the merger. Under normal circumstances, all of this would appear in SEC filings for shareholder review. But here there was nothing public. The paperwork, if it existed, stayed behind closed doors. And that made some investors wonder if the merger was progressing at all, or quietly stalling. Now, only one question remains. What truly lies inside this $10 fortress? Is it genuine institutional innovation, or a mirage built on price stability and silence? A price that doesn't move might represent confidence, or it might represent containment. And containment in finance is rarely benign. At the heart of this silence lie four truths waiting to surface: the remaining cash and trust, the design of the XRP Treasury, the pathway for revenue recognition, and the transparency of governance. When those four doors open, the full picture of XRPN will finally come into focus. This isn't merely a story about a merger. It's about what happens when two financial worlds, traditional and digital, collide without a shared language. If Armada succeeds, it will become a case study in how blockchain assets can coexist with regulatory finance. If it fails, it will remind Wall Street why digital assets are still viewed with suspicion. The market holds its breath. Somewhere in this stillness, a single unreleased document may hold the key, the one that explains why everything looks calm when it shouldn't. And when that page finally opens, we may understand the true meaning of the $10 silence. The Valuester channel invites you to share your thoughts and discoveries about listed, unlisted, or soon-to-be listed stocks and digital assets in the comments below. Your insights help shape future investigations. And to every listener who subscribes, likes, comments, or shares these stories, thank you. Your support drives us to keep uncovering what others overlook and to deliver even stronger, more revealing content ahead. This was Valuester.